Hi, everyone. Welcome to the latest Carson's Take 5. Ryan Detrick, Sonu Varghese here. Sonu, it's early because we're recording this on Wednesday, and the Fed hiked interest rates, but the market doesn't like it.
They
So we're
dropped
going
interest rates,
to, I said hiked. Sorry.
but
That
it felt
tells
like
you
that.
that's how this afternoon has gone, everybody. But we're going to call this one, Did the Fed Pull a Grinch? And what we're getting at, we had a bull market. Things were pretty good. And the Fed apparently, at least for the short term, put the brakes on. I know, like I said, you've got a couple hours to look into it all. What's your take on kind of what just happened here this Wednesday?
I like your analogy of put the brakes on because, first of all, there's no reason to put the brakes on in the first place, right? But let's
Got it.
rewind to what the Fed did. They cut interest rates by 0.25 percentage points. They
Yep.
pulled it down to the 4.25, 4.5% mark. And that's as expected, right? Everyone's expecting that. And no surprise there. But the big surprise, and this is where, they pulled the Grinch, was by saying back in September, they projected that the 2025 policy rate would be about 3.4%. What does that mean? That means they cut by another 100 basis points or 1 percentage point, right? They reduced that in their projections that they just came out with in December. In today's meeting, they said, we're going to cut only twice by 0.5 percentage points or 50 basis points, right? So that's hawkish. And it would be one thing, I was going to say something I won't, but it would be one thing if they did that projection based on something that was really concerning. You and I have talked about inflation. Inflation's elevated because of lag data points, whether it's, shelter insurance, shelter inflation, motor vehicle insurance, or even, for their preferred inflation metrics, it's even higher stock prices raises the price of portfolio management services. It's things like that, right, that is keeping inflation elevated. Here, they've looked at the last two data points for inflation. Powell, the Fed chair, said that, we don't overreact to 2 prints of elevated inflation data. And by the way, November is going to be soft, but then that's literally what they did. I feel like they overreacted. And here we are. They pulled a Grinch.
So, yeah, well said there. We've talked internally on the Carson Investment Research team that one of our potential worries as we get into next year is just this, that the Fed looks at some of the inflation data, gets a little bit worried. You spend a lot of time peeling back that onion. We're not going to get all into it, but we're not so sure inflation is going to be stubbornly high, is going to be sticky. But the reality is, what's the Fed say? What's the market say? I'll put it this way, Sonu. I mean, I don't think this was a shock. Like before this, there were people all over CNBC saying 4 cuts going to go to 2. I mean, it wasn't like this came out of nowhere, but I guess I'll say the initial reaction with stocks selling off significantly on Wednesday, apparently it did come out of the blue. I'll just say this, and I want your take on this. We've seen a lot of times in history where the Fed does something, whether it's a cut, no cut, a hike, a lot of volatility that day. Usually the Fed's on a Wednesday, and then calmer heads prevail, later in the week where people kind of look around. I think that could be another scenario like this right now. What'd they say? They said inflation's a little bit worrisome, but the economy is really strong. I mean, listen, I would rather have a strong economy with maybe a little bit higher inflation than perfect than the opposite, which is, okay, inflation's low, but you have virtually no growth. I mean, call me old fashioned, so I hopefully calmer heads prevail. What do you think?
I think it's a clear overreaction. I mean, given the hawkish nature of what they did, projecting fewer rate cuts, I would say, okay, Paul, what does that mean, right? That keeps policy interest rates at a higher level than maybe the economy needs, especially the housing market, investment spending, things like that. Right. So, but then you think about, wait a minute, to your point, right? The economy is strong. What is the economy? The economy is 70% consumption. Where does consumption come from? Incomes, right? Where does income come from? The labor market. The labor market is pretty solid. Household balance sheets are pretty solid. Net worth, assets minus liabilities as a percentage of disposable income is close to the highest we've ever seen on record, right? So over, 800%. As a percent of disposable income. So even if, let's take the worst case, even if the Fed doesn't cut at all in 2025, which I don't think is going to, I expect them to cut. Even if they don't cut at all, I still think the economy does fine. Probably does more than fine, right? Now, of course, there will be sectors that suffer because the Fed keeps rates high, things like housing. It's hard to home
Yeah.
price, home affordability, things like that, investment spending. And you want those parts of the economy to do well. You don't want to just rely on consumption. You'd be okay if that is the case. But, we'd still like to see, look, why should we settle for 2% growth when we could potentially get 3% growth? And that's really what we're talking about.
Well said there. We've hit about the 5-minute mark. Amazing how fast this goes. Reality is maybe the Fed did pull a little bit of a Grinch short term, but there are still more positive negatives out there. Stocks have still had an amazing year. And honestly, it's still the last part of December that's usually pretty strong. So maybe the Fed's kind of setting things up for a potential Santa Claus rally with a little bit more weakness here. But listen, it's been a fun year. I guess I think we'll do one of these next week or so.
Is it the last one of the? No, we'll do
I'm
one.
not sure.
Well, a week from today is Christmas Day.
Yeah.
So,
we'll probably do one. Who knows? Maybe we might take a week off from one of these, or maybe not. I don't know. But it's still been a really good year. Economy's been solid. Kind of a little ugly with the Fed. We're not buying it so far, though. We think maybe there could be a few more cuts next year once that inflation data comes back and justifies what Sonu's been saying. So with all that, everybody, it's your latest Carson's Take 5. Did the Fed pull a Grinch? Stay tuned. We'll find out. See you next time. Thank you. Goodbye.